Welcome back to our deep dive. Today, we're really digging into a pretty crucial day for the global economy not too long ago, Friday, December 6th, 2024.
Yeah, it was a big one. We've waded through a ton of reports and data to try and make sense of it all for you.
It really felt like one of those days where the ground was shifting economically speaking.
Absolutely. A stark reminder of how connected everything is globally.
So let's paint the picture. You had gold. Gold, the classic safe bet when things get shaky, soaring. It hit, what, $3,220 an ounce? A record.
Unprecedented, yeah. And at the same time, the US dollar was definitely taking a hit, losing ground.
Right, against major players, the yen got stronger, pushing the dollar down to $144 yen.
And the euro climbed past $1.12. I think it landed around 1.1270 cents.
Even the British pound reached $1.30.
Yeah.
And amidst all that currency movement, stock markets everywhere were, let's just say, volatile. Big swings.
Yeah, volatile is probably an understatement for some traders that day.
So what was the main thing driving all this turbulence?
Well, it really centers around U.S. President Donald Trump and his intensified plans for tariffs.
Okay, tariffs. Just to recap quickly, those are basically taxes slapped on goods coming into a country.
Exactly. The idea fundamentally is to make imported stuff more expensive so people, buy things made at home instead.
But these weren't just any tariffs. The scale was massive, right? That's what got the markets really worried.
Precisely. We were hearing about potential duties, taxes as high as 145% on goods from places like China.
145%? That's huge.
It is. And President Trump was pretty explicit about the goal, a kind of reordering of the world economy, really pushing to bring manufacturing jobs back to the U.S.
So this wasn't just tweaking things. It felt like a potential earthquake in global trade policy.
That's a good way to put it. And to really get why Friday was so dramatic, we need to just quickly look back a couple of days before.
Right, because there was a twist earlier in the week. On Wednesday, December 4th, Trump had announced a delay, hadn't he?
He did. A 90-day pause on these same mega tariffs. And the market reaction then was, well, relief. Pure relief.
It really was. Thursday saw this massive surge. The Dow jumped almost 8%.
S&P 500 up nearly 10%, NASDAQ over 12%. Huge gains.
It was like everyone thought, okay, maybe this isn't happening, or at least not right now. A collective exhale on the trading floors.
You could almost hear it, yeah. But that feeling didn't last long.
Because Friday brought a clarification.
Exactly. The message was, this delay, it's just a pause. It's not canceled. These tariffs could still come back depending on how talks go.
Ah, okay, so the threat was still very much there.
Very much. And that renewed uncertainty, that possibility that could snap back into place, that's what threw fuel back on the fire Friday morning. It was all about that lack of certainty.
So Friday's roller coaster was basically the markets recalibrating, facing that uncertainty head on again.
Got it. Okay, so let's follow the ripples. Where did these tariff announcements hit first and hardest? Well, a really obvious place to start is the U.S. dollar itself. We saw it weaken, like you said, against the yen, the euro, the pound.
Why does that happen? Why does the dollar weaken when there's uncertainty tied to U.S. policy?
It's about where investors feel their money is safest or where they see better returns. They started moving away from assets priced in U.S. dollars. It's a kind of reassessment of risk.
Things like U.S. Treasury bonds, usually seen as super safe.
Even those saw some selling pressure, which is pretty telling. U.S. stocks, too. People looked for perceived safer spots.
And selling treasuries, that pushes up their yields, right? Makes borrowing more expensive for the U.S. government.
That's right, higher yields. And there were even some whispers, nothing officially confirmed, mind you, but talk that China, a massive holder of U.S. debt, might be thinking about selling some of its treasury holdings.
Wow, okay. That would be a huge move. Almost like using their financial clout strategically.
It definitely raises that possibility. Even the hint of it can make markets jittery. But think about why the dollar, often seen as a safe haven itself, would weaken here.
Yeah, that seems counterintuitive sometimes.
Well, the logic is, if the source of the economic disruption, these tariffs, is seen as originating from the U.S., then investors might look outside the U.S. for stability.
So the safety lies elsewhere in this specific scenario.
Kind of, yeah. It's a flight to safety, but maybe away from the currency most directly linked to the policy causing the waves.
Makes sense. So while the dollar's down, gold is way up, hitting that record. What's the magic of gold in times like these?
Gold's got this ancient reputation, a store of value. It's seen as a hedge against inflation, against general economic craziness. When currencies and stocks feel risky, people often pile into gold to protect their wealth.
It's tangible, something solid when paper assets feel shaky.
Exactly. And there's another factor. A weaker dollar actually makes gold cheaper for investors using other currencies, so that can boost demand even more. A bit of a double whammy pushing the price up.
And this wasn't just a one-day spike for gold, was it? It had been trending up.
Oh, yeah, absolutely. Gold had been performing well through 2024 already. You had ongoing geopolitical stuff, central banks quietly buying more gold reserves. This tariff news just poured gasoline on an existing fire.
Okay, dollar down, gold up. What about the stock markets? We had that huge relief rally Thursday, then boom, down again Friday. What's the thinking there?
Thursday was pure optimism, or maybe relief is the better word. The 90-day delay felt like maybe, just maybe, things wouldn't get too bad too quickly, so investors jumped back in. Buy, buy, buy.
Right, catching the upswing.
But Friday's news that the tariffs were still very much on the table, that pulled the rug out. Wall Street saw a big drop down, S&P, NASDAQ, all down significantly.
Wiped out a lot of Thursday's gains, I bet.
Pretty much, yeah. It really highlights how hypersensitive the market was to any word on these tariffs.
A real whipsaw for anyone invested. And this wasn't just a U.S. story, right? How did markets react globally? It sounds like it was a mixed bag.
It was, mostly negative across Asia. Tokyo's Nikkei, which also surged Thursday, fell sharply Friday. Same story in Sydney, Seoul, Singapore, Bangkok. Gains vanished.
But you mentioned exceptions. Hong Kong and Shanghai.
That's right. They actually moved up a bit, which is interesting, isn't it?
Yeah, why would they go up when everyone else is going down?
The thinking is investors there were basically betting on the Chinese government stepping in. They expected Beijing to announce stimulus measures, policies to cushion their own economy from the impact of potential U.S. tariffs.
So it was kind of a vote of confidence in China's ability to counteract the U.S. moves?
Sort of, yeah. A bet on domestic support buffering against external pressure.
And Europe. How did they react?
A bit more varied, maybe slightly delayed reaction. London, Paris, Frankfurt actually saw some initial gains on Friday morning.
Really? Why?
Maybe a feeling the direct hit wouldn't be as immediate for them. Or perhaps just taking longer to digest the news. Also, places like Taipei and Ho Chi Minh City saw gains, possibly linked to news they planned talks with the U.S.
It really shows how different regions process this stuff based on their own situation and exposure.
Totally. It's a global system, but the impacts aren't uniform.
Okay, let's zoom in on China's reaction beyond just their stock market. You mentioned President Xi met with the Spanish PM.
Yes, and that was quite pointed. He essentially called for the EU to work with China to push back against what they termed unilateral bullying from Washington.
That sounds like a clear diplomatic countermove, trying to build an alliance against the U.S. policy.
It signals that broader geopolitical angle, definitely. And domestically, China also signaled a policy shift. They announced they were moving towards a moderately loose monetary policy.
Moderately loose, meaning easier money.
Basically, yeah. Likely increasing the money supply a bit, making it easier to borrow, trying to stimulate their own economy to offset any negative effects from the trade situation, like loosening the reins gently.
So diplomatic pushback internationally and economic support measures at home.
A dual strategy.
Seems like it. And hanging over all this, as we touched on, is that background threat. What if China or other big holders decided to actually sell off large amounts of their U.S. Treasury bonds?
That capital war scenario.
Right. If they started dumping treasuries, that could really push up U.S. borrowing costs, impact interest rates. It adds a whole other layer of financial risk and shows just how interconnected and maybe fragile things are.
Okay, let's pivot back to the U.S. perspective. How did the administration react to the market turbulence Friday, and what was the ongoing justification for sticking with these tariffs?
Well, President Trump publicly acknowledged there might be, I think he called them transition costs and transition problems, some bumps in the road.
It's still bullish overall.
Oh, yeah. The message was still very optimistic. He predicted a beautiful future for the U.S. economy because of these policies. His Commerce Secretary went even further, talking about being on the verge of a new golden age.
Wow, a golden age. So the core belief remains strong. Tariffs force companies back, create U.S. jobs, strengthen the U.S. economy long term.
That's the fundamental argument, yes. Long-term domestic gain, even if it causes some short-term disruption or pain.
But the flip side, the immediate worry for many people is higher prices, right?
Absolutely. That's the most direct potential impact for consumers. If these tariffs stick, companies importing goods will likely pass those extra costs on to shoppers. Your electronics, your clothes, lots of things could get more expensive.
And the risk of other countries hitting back with their own tariffs.
That's a huge risk, retaliation, which then hurts U.S. companies trying to sell their goods overseas. It could easily spiral into a bigger, nastier trade conflict affecting lots of different industries.
So a strategy with potentially big rewards in the administration's view, but also really significant immediate risks for consumers and exporting businesses. Now, you mentioned earlier making sure we stick to the facts. Just to confirm, where is this info coming from?
Right, it's crucial.
Yeah.
So the gold price, $3,220. The currency rates we quoted for the yen, euro, pound, the stock market percentage moves, all that comes from tracking data from the major financial exchanges and established financial news sources.
Okay.
And the statements from President Trump, President Xi, the details on China's monetary policy, those are based on official releases and reporting from major credible news outlets. We're sticking to verifiable information here.
Good. Okay, so let's bring it home. Why should someone listening right now, maybe not directly involved in global finance, care about all this? What's the real-world impact?
Well, look, these big global shifts can definitely hit your wallet. Like we said, tariffs could mean paying more for stuff you buy every week.
Right. Groceries, clothes, electronics.
Yeah, and if the dollar is weaker, any plans for traveling abroad suddenly get more expensive. Your savings don't go as far.
And the stock market swings. That directly impacts retirement accounts, 401ks, pensions.
For sure. If you have investments, that kind of volatility matters. It's not just abstract numbers. It can affect your savings, your future plans.
But it's not all potentially negative, is it?
Yeah.
You mentioned the potential upside the administration hopes for.
Right. If the plan works as intended, bringing manufacturing back could mean more jobs created here in the U.S. That's the stated goal. And obviously, if you happen to be holding gold during this period, you did pretty well. Your investment went up significantly.
So winners and losers, potentially, depending on your situation and how things play out.
Exactly. And in times like this, you see that safe haven scramble we talked about, people rushing to assets perceived as less risky.
We covered gold extensively. What else acts like a safe haven?
Well, certain currencies often do. The Japanese yen and the Swiss franc are classic examples. They tend to strengthen when global uncertainty rises. Interestingly, on this specific day, even the euro and the pound looked relatively safer than the dollar because the uncertainty was so focused on U.S. policy.
And the rising U.S. Treasury yields we discussed. That's not just about government borrowing, is it? It ripples out.
It definitely can. Higher Treasury yields often act as a benchmark. They can eventually lead to higher interest rates on things like mortgages for homes or loans for businesses wanting to invest or expand.
So potentially slowing down the broader economy.
It can have that dampening effect, yes. And adding that layer of worry about major bondholders like China possibly selling off assets. It really does feel like a high-stakes, complex game of global chess, everyone watching everyone else's moves.
So looking back at December 6th, 2024, it all seems connected. Trump's tariff talk
Directly impacts the dollar's value
pushes investors towards gold.
and sends stock markets, first up in relief, then down sharply on renewed worry. Wall Street, Asia mostly down.
Except Hong Kong and Shanghai betting on Chinese stimulus.
Europe having a slightly different, maybe delayed reaction initially.
And then China's reaction, calling for allies against bullying, loosening monetary policy.
All while that background fear of a capital war of treasury selling lingers.
You have the U.S. administration talking up a golden age despite potential transition costs.
While economists and consumers worry about higher prices and retaliation, it's that tension.
And again, we're grounding this in the verified facts. The gold price, currency rates, market figures, leader statements, all cross-checked.
Because understanding this matters. It connects directly back to you, the listener. The cost of goods, travel, retirement savings, it's all potentially affected.
So as we wrap up this deep dive on that really pivotal Friday, December 6, 2024, maybe the key takeaway is just how interconnected everything is and how much uncertainty can ripple through the system.
Absolutely.
Which leads us to a final thought, maybe a question for you listening. Given everything we've talked about today, the events of that Friday and the potential for more big shifts in trade and finance, what indicators will you be keeping an eye on in the coming months? What clues will you look for to figure out the longer-term impact on your own finances?
Yeah, what will you be watching? It's definitely a situation that warrants ongoing attention. Staying informed is key.